Is Shopify $1,400 stock price a good buy right now? Like, why can't they just do a stock split? I mean, $1,400 per share is pretty darn expensive. I mean, who can afford one share of Shopify? Just do a damn stock split and get it over with. Hey guys, I'm Curious Peggy, and I'm curious. Is Shopify stock price at $1,400 per share is a good time to start a position for the next 5-10 years and onwards? So as usual, after researching and putting a lot of hours into this prediction, I made a very easy to read and understandable Excel spreadsheet and graph that predicts the stock every year up until the year 2030. And honestly, this was one quite difficult stock to predict, so smash that like button. But you'll see why it got difficult in the forecast in just a bit. Now, before we get into it, there are a few disclaimers that you should know. Am I a financial advisor? No. Can you rely on this video to make the choice to buy Shopify stock or not? I would say yes, because all information, stats, and facts are from solid data. So as usual, nothing came right up my ass. Can you guys use this video as research? I would say yes, you can. Do I own any Shopify shares? At the moment, I don't. And honestly, I'm not really planning to in the foreseeable future for the next 2-3 years, as you guys will see in the forecast why. But the main reason is because there's another company that's kind of following the same footsteps of Shopify, and it has a much more growth opportunity. I'll mention that company at the end of the video, and yes, I am heavily invested in that one. Should you smash the like button? You guys should definitely smash and destroy the like button. And if you subscribe, will there be more videos like this? Oh hell yeah, man. I love these types of videos. I love talking about the stock market. I've been doing it for about 8 to 9 years, and I just love the stock market. So any company that you guys want me to do a forecast on, just comment down below and I'll be more than happy to look into it. And heck, it could probably even be the next video. Shopify was one of the best stocks to buy back in 2020 when the pandemic started, because Shopify is mainly an e-commerce platform or a dropshipping platform, however you guys want to look at it. And e-commerce in general skyrocketed due to the lockdowns and shutdowns in 2020, putting Shopify in probably the best position ever, shooting up over 300% since their lows in 2020 to date, which is honestly pretty freaking nice. That means if you would have put $1,000 in 2020, around now you would have had about like $4,000, like 3x your money. That's just insane. Now Shopify is a huge company right now, sitting almost at a 200 billion valuation. Obviously they would have other companies that would obviously help them. So let's briefly go over them, because as an investor, I like to know what else I'm investing in when I buy Shopify. These are the list of companies that they currently own, and starting off with Handshake. Handshake is a business-to-business order entry solution. Ticktail is a social shopping website for shoppers to discover emerging designers all around the world. Return Magic, a return solution. Overload, as we all know by now, sources products from suppliers automatically, like AliExpress. I'm sure you guys heard about that one a lot. Tiny Heart, an app studio that creates products. Vaultmate, a software development company. Kit, a virtual marketing assistant. Jet Cooper, a user experience agency. And Select Start pretty much creates mobile games and apps. And many more companies, but these are the main ones. But quite honestly, all these companies that they own really do help the Shopify website, and we'll see some examples in a bit. So it's really safe to say that Shopify is a monster when it comes to the e-commerce world. I mean, just like what Toby says, the internet is the world's largest city, and Shopify is building its commerce infrastructure. I mean, if that doesn't tell you what the future says about Shopify, I really don't know what will. Oh wait, the forecast will. But before we dive into the forecast, did you guys know that Tesla, Budweiser, Wikipedia, their online shop, not their actual website, and many other well-known companies use Shopify to sell their products online? I mean, that's crazy awesome. You can buy a Model S 3, XY, or Sexy on a Shopify-based platform, which goes to show you that the Shopify platform is extremely easy to make a website. Wow. What this tells me that if Tesla and all these other big companies that are using Shopify-based platform to make their website, then Shopify is a very easy and reliable place to make a website. So if you guys want to make a website, I guess Shopify is one good place to do it. What I'm trying to say is that if Tesla is doing it, then you can too. Now let's talk about the future of Shopify and what their plans are. Shopify now has about 11% of the entire global market share, but they have about 30% in the US alone. But the future of Shopify and e-commerce is quite clear. There has been a major shift in the world in 2020 from shopping in person or face-to-face all the way to buying and selling online. The trend was going down that anyway, but the pandemic has accelerated accelerated the e-commerce industry forward by about 10 years. According to Shopify, about 46% of consumers are not comfortable shopping in stores anymore and they prefer online. Although this is all due to the COVID-19 pandemic, I strongly do believe that once things go back to normal like we accept this virus, like the other virus, the flu and all the other ones, consumers will feel more comfortable than to go back in store face-to-face shopping, but it won't be the same. And sadly, it'll never be the same. The future of Shopify is pretty much guaranteed at this point, but does that mean we can go all in? Let's find out. By the way, guys, if you guys want to read the full article of the Shopify report, check the link in the description. So back in 2020, the peak price was about $1,226, and the current price right now is $1,426. Total revenue back in 2020 just hit almost $3 billion, with the net income being $320 million. Shares outstanding was 123 million, with the EPS being 2.6, and with the forward PE or a PE in general was about 472, which just is absolutely insane, making the stock price hit a peak of $12.26 with the market cap being 150 billion, which is just crazy. I mean, a PE of 470 is, I mean, it's like almost like Tesla here. I mean, it's just forward thinking is crazy. Now, finding a prediction from 2021 to 2030 was a bit tricky, because in 2021, when we look at the recent quarters, not only has Shopify been crushing it, but just look at it, it doesn't look real. The fact that net income is excelling revenue in quarter one, and in quarter two, it's almost the same. I mean, like, it's not that far off from being leveled with revenue in quarter two. This doesn't make any sense. After doing a little bit of research, it seems like they sold a little bit of some assets or some security of good. That's why earnings go up. It doesn't make sense for revenue to be a lot less than earnings. It just doesn't work like that. Hence, giving the stock price, mainly the PE ratio, a little bit of an illusion. Right now, the PE is sitting at 73. But when we look at the past, when the stock was going crazy, it reached an all-time high of almost 650 PE, and now it's down because of the earnings of the Q1 and Q2 of 2021. Right now, the price is not where it needs to be. The PE ratio is going to double when things go back to normal. Now, when I looked at simply Wall Street for the prediction, because their prediction are mainly accurate and they do take a lot of things into consideration, but from 2021 we can see there's a big lump, and that's because due to the security of goods they sold or the assets that they sold, so it's obviously not right. So I went back to Q1 and Q2 of 2021 and I got the adjusted earnings, and this is what I got. It came to 538.7 million, which that sounds about right, being the first two quarters from selling based off their revenue. Now, what I did take into consideration from Simply Wall Street was their revenue, because that seemed to be correct. So I inputted Simply's Wall Street revenue from 2021 to 2023, and for the net income of 2021, I added another 500 billion to what I had for Q1 to Q2 as an estimate, and I got over $1 billion in net income, which is actually pretty good. Now, I suspect for the next few years after that, up until 2024, Shopify is going to be giving 50% year over year, because Shopify is just on a roll right now and is going to be for quite some time. Putting that 50% onto 2022 all the way to 2024, we get these numbers. Let me know if 50% year over year for the next 3 years is too much or too little. I really do believe Shopify can deliver that much in the next few years, because online shopping, people are now used to it. Those who are skeptical are now more used to it now, and they do feel more comfortable. So I do think sales are going to continue to be high for the next few years until it levels off a little bit. Simply Wall Street is saying by 2023, by end of 2023, that they should have about 900 million in earnings, but I don't know. I think that's just being very, very, very conservative. I think they can do a whole lot more. So comment down below, let me know what you guys think about that. Now, when it comes down to the revenue from 2024 and onwards, we can see that year over year from 2021 to 2022, about 60% increase, and 34, then 38. So what I did was that I took a conservative approach and I said 30% from 2024 all the way to 2030, and this is what we got. Close to almost 55 billion in total revenue in 2030, which I think is quite reasonable, given the fact that e-commerce will continue to grow heavily up until then. When it comes to the earnings, what I did was that from 2025 and onwards, instead of doing 50% rate return every year, I did 30%, because competition is going to get higher, it's going to get more harder, and e-commerce will eventually level off slowly. So I said 30% all the way to 2030 from 2025, and we get this. Almost 17 billion in net income in 2030, which is just absolutely insane. Let me know if you guys agree with that. Trust me, guys, this was quite difficult to do. I may not be right, but it's a prediction and it could go either way. Now, the shares outstanding is very important when it comes down to predicting the stock price based on the valuation on the net income and revenue. And based on the chart here, we can see a lot of shares being sold to the public, and that makes sense because a lot of insiders are selling. Because if you look at the stock from like 5 years ago till now, it's just gains, man. I mean, if I was an insider, I'd probably sell half my shares and just, get retired or something, because that's a whole lot of money. So it definitely makes sense that there's a lot of shares being sold within the company and more shares are available to supply. Not to mention, guys, there's only 130 million shares available. That's not a lot of shares for a company. That's why the price is so high. That's why they should do stock splits. 5 for 1, 10 for 1, 20 for 1, whatever, man. It'll bring the price down and it'll be much more affordable for everybody. But anyways, what I did was that I took these numbers and I put it into an Excel sheet because I wanted to see how much it was on a quarterly basis and then on a yearly basis. And on a quarterly basis, it was about a 2% increase, just a little over 2% increase quarter over quarter in shares outstanding. That means every quarter they sell about 2% shares to the public, which is actually quite a lot of shares. But we're doing this on a yearly basis, and based on the yearly basis here, it's about almost 9%, which is just absolutely insane. That's a lot of shares being sold to the public. I mean, you can just fix that by doing a stock split, but hey man, that's just my opinion. So what I did here was that I took an average of 8% and I plugged it into the formula. We get about almost 266 outstanding shares by 2030 if they don't do any stock split up until then. The EPS follows that as well, giving it almost a 64 EPS by 2030, which is absolutely insane. And if the price ends up being $1,226 back in 2030, the PE will be 19, which I personally believe Shopify will never be in the 19 PEs, not even in the 30s, not even in the 50s. You'll see why in just a second. But if this happens in 2030, it's just going to be a very no-brainer stock to buy. No brainer. Now that we have the prediction ready, we can go ahead and figure out the PE, the correct PE that can give us a stock price all the way to 2030. And this part was pretty darn tricky. Up until mid-2020, there was no PE ratio because they weren't making any money. But on Q3 of 2020, the PE skyrocketed for the first time all the way to 650, which is just absolutely insane. And when we look at Q3 of 2020, they made a profit for the first time ever. And it was almost 30% profit, which is absolutely juicy. And naturally, PE is calculated by dividing the market share by the EPS, which they made a profit for the first time, giving it a 650 PE, which is just absolutely insane. I mean, Tesla had 1,000 or 1,200 PE at one point, so these growth stocks are just crazy, and I'm not even surprised at this point. But now the PE is all the way down in the 70s. But again, it's manipulated, not manipulated, but it's an illusion because of the security of goods and assets that they sold in Q1 and Q2 of 2021. But when we go ahead and adjust the net income, it comes close to almost 300 to 400 PE, which is like pretty much what happened in 2020. That's the correct PE. But I'm gonna be conservative here and be more realistic and say from 2021 all the way to 2030, I don't think it's gonna be at 300 for a very long time, not even 250, heck, not even in the 400s, because they're gonna keep growing and making a lot of earnings. I strongly believe that 180 is a good average to be at, 180 PE. And obviously over time, this number will go lower and lower when they make more earnings. But at the moment, I think 180 seems to be fair as a PE for Shopify. I mean, people are buying when the PE was 650, then 400, and now they're still buying. So I mean, like, I think 180 is a good PE from 2021 all the way to 2030. So let's plug that in and see what we get. We can see that once we plug that in 180, we can see that the stock price in 2021 will be 1,407, which honestly, that's where we are right now. So that's pretty darn accurate. And in 2022, the stock price will be about 1955, which when we look at Yahoo Finance, it's saying 1 year target price is going to be 1972, which is honestly seems to be kind of act like we're on the right path here. Again, it's all based on the 180 PE. It could go higher, it could go lower. 2023 is going to be almost $2,700, and then 2024 is going to be $3,780, which is just crazy. And then 2025 is going to be $4,500 per share, and $5,500 in the year of 2026, hitting a market cap of $1 trillion if the PE is 180 at that point, which I don't think it will be, but $1 trillion around 2026, I mean, it sounds pretty nice and insane. 2027 is going to be 6,600. 2028 is going to be almost 8,000 per share. 2029 is going to be 9,500 per share. And then 2030, almost 11,500 per share with a market cap of 3 trillion. Wow. Honestly, this looks a bit realistic to me, but again, let's see what the market says. Mainly, let's see what their earnings say, because that's what it's all based on. Here's the chart to see how it looks like. It is going to the moon. The compound effect is absolutely insane. To the moon we go. But as usual, guys, this is only a prediction. Maybe this might not happen at all. Maybe in 5 years they go bankrupt. Bruh. Highly likely they will not go bankrupt, but you never know what's going to happen. 2020 was an interesting year where everyone thought it was going to be a good year, and then the whole world went upside down. And some of the companies that had great forecasts for 2020 are now bankrupt. You got to take everything into consideration. Or maybe the other company that I'm heavily invested in just a bit will overtake them. You never know. But yes, take this as a grain of salt, guys. This is only a prediction. Now, I don't have too much of a concern with Shopify when it comes to the future, because the future is literally them when it comes down to online shopping. I'm not even bothered about their competitors too much, because even though there's a lot of them, Shopify is on an upside. They have a lot of opportunities, and for the next 5-10 years, it's just nothing but gains. So you may be asking, if you don't have any problem with them, why don't you own any shares? Well, there's 2 reasons. One, the stock price is hella expensive, being at $1,400 per share, and their PE, as mentioned before, it's a little bit illusioned. It's not correct. So I fear that as soon as the PE is adjusted, the stock price may go down for a little while, and if anything, that's when I will be interested to enter. If they could also do a 5-for-1 split or 7-for-1 split, I would be more interested then even more. And 2, there's another company that follows Shopify's footsteps, and there's a lot more growth opportunity in that company. Don't get me wrong, Shopify is definitely in their growth period and they have a lot ways to go, but this other company just has a lot more opportunity and a lot more growth ahead, because it's early stages. The company that I'm talking about is Lightspeed POS, or ticker symbol LSPD. These guys are a POS and e-commerce company that's fast accelerating and soon to be the next Shopify. In stock wise, not company wise, these guys are 2 different businesses but in the same industry. I'll talk more about Lightspeed in another video because it needs its own, but yes, I do heavily own a lot of shares of Lightspeed. But Shopify has a lot of room for growth. As the world is in acceleration mode with online and e-commerce, Shopify will greatly benefit. So go all in on Shopify. You could. Your money is definitely safe with Shopify in the long term. Heck, it's better than a savings account. Anything is better than a savings account. But as usual, more research is always needed, so do your DD, invest smart, and invest safe. I hope you guys enjoyed this video. If you guys are this far into this video, that means you guys have enjoyed, so smash that like button. It'll really help me out and it'll push this video out to people that need it. But if you guys enjoyed this stock price prediction, check out this 10-year Facebook stock price prediction with this Google stock price prediction, as well as this Apple one. You guys won't be disappointed. You guys will have a great idea about it. And don't forget to subscribe, and I shall see you guys in the next video. See ya.